GMR. Now, Aeroports De Paris has struck a deal with GMR Airports to buy 49% stake in the Indian entity. The deal is valued at about 10,800 crores. Nikki is standing by with the contours of the agreement. Nikki, good morning.
Good morning. Finally, the deal has come through. We're expecting a positive reaction coming on account of that. Remember, Tata GIC deal did not go through because of the regulatory hurdles. But then now again, the deal has come through and looks like it's going to be a positive development for GMR Infra, just on the face of it, looking at the valuation. Basic first, where Aeroports De Paris has agreed to buy in more than 49 or close to 49% stake in the company. With this, GMR Infra will retain 51% and also the management control overall in the airport division, which is a great positive coming in. This deal has been valued, or the 49% stake is for a consideration of around 10,780 odd crore, out of which 9,780 odd crore would be through secondary sale and 1,000 would be fresh equity issuance. To give you more detail about this deal, it's split into two bits, where the first stage will see an amount of around 24.99% being sold in the coming days, and the remaining bit of it, which is 24%, that will have to have a regulatory approval. So that might just take some time to come through, but then nevertheless, if you look at how the valuation has been done for the deal, at 49%, if you look at the implied valuation of 100% for the airport division, then the deal pegs the overall valuation of the company at around 22,000 odd crore. Earnouts are to an extent of around 4,750 odd crore. Remember, these are linked to the performance achievement of the airport division, and post earnouts, or including the earnouts, the valuation of the overall airport division is to an extent of around 26,475 crore. Overall, the main objective of GMR Infra is to deleverage or to bring down the debt. With this, if 100% of the equity consideration of 10,780 odd crore, if that comes through, then the net debt would come down from 25,660 crore to 14,880 crore, which is a great positive given debt has been a concern for GMR Infra. What's ADP rationale behind this is it's expected to be value accretive, but that will take some time. That will happen after 2025, and there will be limited impact on earning per share for next 5 years overall.
Okay, so you mentioned that the Tata deal got
annulled.
Because of the regulatory issues. How does this deal compare to the Tata deal?
Actually, it's sweeter if you look at 2020 financials or the estimated projections that we have right now. If you consider this deal, Tata, GIC and SSG, remember, that happened in March 2019. At that point of time, EBITDA performance of the company wasn't that great, but the net debt level, notably, that was lower because the company has now taken upon expansion. But then giving basic details or the difference between the two deals is, first I'd like to start off with the stake sale. Here, Tata's GIC and SSG, they were picking up stake to an extent of 44%. ADP, it's going to be a 49% stake. Valuations, obviously, the equity valuation of how they valued the company in this last 1 year also changes. Tata valued it to an extent of around 22,000 odd crore, and this ADP has valued the company at 26,475. The airport division rather at 26,475. Clearly, you can see the expansion in base to an extent of around 4,000 odd crore. Value split there, they were getting 7,000 crore secondary market and 1,000 crore issuance. Here also it's 1,000 crore from fresh equity issuance, and 9,780 crore coming in from the secondary sale. So that's the basic detail or difference between the two deals. But if you look at the valuation picture of the companies, this deal seems to be far sweeter than what we saw for Tata, GIC and SSG deal, because the equity value, clearly I highlighted the fact that here you get 4,000 crore or more, the company has been valued higher. The debt number at this point of time stands at around 11,000 odd crore, because of which the enterprise value goes on to 37,504 crore for ADP, and implied the same, you would see the number coming to 33,514 crore. EBITDA, these numbers are projection, 2,541 crore. We've just taken Q3 EBITDA at the run rate of Q4 similar levels, because of which the numbers are coming out at 2,541 odd crore for ADP, because of which EV to EBITDA now in this deal stands at 15 times as compared to 13 times earlier, which Tata saw. But I'd like to highlight one fact. This is, on the face of it, this looks sweeter, but if I go back and compare FY19 financials, it reverses, because FY19 EBITDA performance was lower, but at the same time net debt also was lower, because of which the deal doesn't look as sweet. But if I'm taking FY20 projections, in that case the deal looks to be much better than what it is.
Yeah, I think the street would want to compare Tata's deal because they did it on the back of FY19 valuations to this current deal based on FY20 valuations, and on that basis alone, maybe this deal leaves a bit is a less sweet compared to that one. But anyways, GMR Infra has finally gotten a deal and at a good time, and let's see. I would reckon that the stock is positive.
Yeah,
thank you very quickly.
Just analysts are just trying to say, even if the deal is less sweeter, if you look at FY19, irrespective of the argument, the big picture is that the net debt is coming down, which is happening because regulatory hurdles otherwise did not let the deal happen, and now that's going on. That's great positive coming for GMR Infra.